it tracks the NASDAQ 100. Of course, you have those big tech heavyweights in there that I mentioned earlier, but can you talk a little bit about the full makeup of the ETF in terms of, yes, we are getting a lot of exposure to tech, but also exposure to some other sectors as well?
Yeah, no, that's a great point. And I feel like when you look at QQQ generally, that's a misconception that we get a lot. In years past, it has been significant weightings to technology, but as you look at it today, our technology weighting is under 50%. We have significant exposure to consumer discretionary names, to communication services names. And I think when you look at tech as a whole, the paradigm has kind of changed. It's very hard to put companies in just one specific tech box. Right? As you drill down into the autos, right? You have self-driving cars. Right? You only think of auto companies as technology, but there's certainly an aspect to tech in their underlying business. So, we believe that the makeup of NASDAQ 100 and specifically QQQ is kind of large growth across the board.
Interesting. Yeah, I think that's an interesting point that every company, whether it is in retail or communications, what have you, having that tech edge is really important to keeping sustained growth. And something else that's important is strong research and development, and that's also a common thread with the names in this fund.
It is, absolutely. I mean, we believe that QQQ is a very innovative fund, right? And I think in an effort to stay innovative, right, you need to be reinvesting in your business. As you look at the NASDAQ 100, R&D reinvestment rates are near 10%. So meaning almost 10% of sales are reinvested in R&D in these underlying companies. So what you get from that is, not always a one-to-one kind of parallel of, oh, this dollar went to here, but as you look, these are the disruptors, the innovators that are out there in the market, and consistently they're the ones that are bringing innovative products and frankly, innovative ways to make money out to the market.
Yeah, and then that in turn also boosts the fundamental picture as well, bringing new products to market, boosting sales, strong earnings, and that's something that our audience is really focused on, is the strong fundamental picture of these names. And with that R&D spend and reinvestment, do you see that really translating to the fundamental picture as well?
You do, and to go back to your earlier point about technology, right? I think as you look at tech of the past, right, you really just needed a website to be considered a technology company, right? Really no earnings, very limited sales. It's a very different picture, not really your parents' technology companies. I mean, as we look, Google celebrated its 15th year IPO today. Right, so pretty big anniversary. It's hard to believe that Google not being kind of a traditional tech company that's been around. But as you look at this, this reinvestment in R&D, it really has changed these businesses for the better, right? They're delivering results to the bottom line. And as you look at the companies in QQQ on average relative to, say, the S&P 500 or, again, other growth indices, what we've seen is significant sales growth, significant earnings growth, if you can believe it, even significant dividend growth. So even maybe non-growthy type aspects of the market, we're seeing that shine through in QQQ specifically relative to other indices out there.